Hello, everybody. Good morning or good afternoon, depending upon where you are today. This is Andy Gage. I'll be our MC for our today's session. Looks like we have a very impressive list of people that have signed up and are joining the call. So I'm just going to go through a few administrative things here while the additional people are logging into the system here. This is the second webinar that we are doing in a series to help corporate CFOs and treasurers cope with and deal with the challenges related to the Brexit situation that we've been dealing with over the last couple of weeks here. As we're monitoring the situation, we're seeing a lot of activity in our client base that we think is worthy of sharing with our clients as well as others that are trying to deal with this. So this is one of many that we'll be doing in a series of these sort of briefings that we're trying to do every week or two as the events unfold here. During today's session, I think we're going to try to get through the material in about 30 minutes. I know that everybody's got a lot of stuff to attend to, and we want to be mindful of that. We will take some questions at the end of this. There's a Q&A chat panel that we are monitoring. So if you have questions as we go through the session today, feel free to share those questions, and to the extent we have time to review those questions and work through them, we will certainly do that. So with that, really what we want to reflect on is how the Brexit situation is unfolding and what are some of the challenges that companies are dealing with. And over the last few weeks here, as we've been out working with our clients, our treasurers and our CFOs, the Brexit situation is coming at a very interesting time because many of the companies are now going through their quarterly earnings reporting process. And one of the observations that we made, and Wolfgang who will be sharing some of his personal experiences, have witnessed, is that CFOs are really wanting to make sure that they're very well prepared for what they expect to be questions from the board and from the investor community. So this session today is really kind of a starter kit on how to be better prepared for what's coming down the pike here from the reporting process that many of our clients are going to be dealing with, as well as other companies out there. Today, joining me on the session is our CEO, Wolfgang Koester. As many of you probably know, I know we have several customers here, as well as some of our partners in the banking and consulting ranks here. Wolfgang is thought leader in the area of foreign exchange, has really worked exclusively on behalf of corporates over the entirety of his career, and is often featured as a commentator on CNBC, Fox Business News, and most recently wrote a very nice piece that just showed up this morning in Treasury and Risk on helping CFOs be better prepared for what's coming and how to deal with that. So if you have an opportunity to take a look at that article, it is on Treasury and Risk. When we send out the follow-up materials today, we'll send a link to that article. I think it's a real extension on what we're going to be talking about today, and I think you'll find that information very useful. Myself, Andy Gage, I've been with the firm for about 10 years and have worked with many of our large clients and as well as mid-cap clients, helping them put in place best practices and processes on how to deal with currency risk management. And prior to that, a number of years in the consulting ranks, helping companies implement ERP systems and going through business process re-engineering efforts there. So look forward to sharing our experience today. I know that we've got a few first-time attendees to some of our webinars. So for those of you who are not familiar with FiREapps, we are the #1 provider of currency analytics in the market today, and we pioneered this space over a decade ago. And as a result, I know we have more experience working with companies that have complex ERP environments. We've worked a lot with companies that have SAP and Oracle, and really all of the ERP systems that fall within the Oracle enterprise umbrella, as well as many of the second and third tier ERP systems that you find in the marketplace from a Microsoft or MFG Pro, things of that nature. And we have a really, really broad customer base. So our experience that we're going to be sharing with you is really drawn from a very big cross section of companies in a number of different industries. And we're also very proud of the fact that many of our clients have really thrived in this environment. And we've had a number of companies, including Dow Corning, Itron, most recently Ericsson, that have won awards for having the best solutions and best approaches to managing currency risk, despite how challenging the market environment has been over the last several years here. So With that, let's take a stock of what's going on out there. This was a survey that we received in our inbox over the last few days here from GT News, and they were out assessing primarily more of a European client base of about 150, 160 treasurers and CFOs. And as they were looking at what was happening in their world, FX is right there at the forefront of concerns and areas that are most important to you. And it's really no surprise. I mean, you look at the number of currency crises that we've had to deal with just since 2009 and more recently since 2012. There seems to be one massive event after another that's really created a lot of uncertainty. And given what's happening, from a foundational standpoint in the currency markets, we expect this to continue. And I think as we get Wolfgang online here, he can share some of his views on this as well, which he often shares with business press. And as we think about where the challenges lie, with FX being such a high priority, most of the treasury professionals out there in the market today are dealing with a very complex set of challenges. And for those of you who are CFOs that are sitting in on today's session, I think one of the messages that we have is that, oftentimes, we find that the Treasury organization is really asked to do a tremendous amount with very little, and they're often not at the front of the line in terms of budget. But we do know that from our customer base, from companies like Google and several other clients, where they've used technology to bridge the gap between having a big team of people, they can be highly effective and address many of the challenges that treasurers are dealing with, whether it's dealing with the FX volatility, getting visibility to cash flows, being able to get access to real-time data to monitor situations such as we went through over the last couple of weeks. Technology can help heal a lot of these challenges that keep treasurers up at night. And one of the things that's still a predominant issue, even at this stage of the game, after companies have invested hundreds of millions of dollars in their ERP systems and other parts of their business. This is a survey that was put out from the team at Deloitte earlier in the year, and they still say lack of visibility to FX exposures and the reliability of that forecast is the number one challenge. And then you see the third bullet down there. Companies are still relying on legacy approaches based on manual processes to capture exposure information. And there's really no reason for that. There are companies like mine that provide best-in-class capabilities to automate that process, and many of our clients have instantaneous access to their information, can see what's happening in their balance sheet and their income statements, and be better prepared to deal with what's happened, as well as do scenario analysis and what-if analysis to anticipate what might happen around the corner. And as we think about what we've witnessed over the last couple of weeks here, and I'm going to ask Wolfgang to come in and comment on this. We've seen a breakdown when it's ultimately most important to have really streamlined communication between the multiple constituents that has responsibility for FX. So, Wolfgang, would you mind commenting on that?
Yeah, no, absolutely. So really what I spend a lot of time really moving right up to Brexit and after Brexit, literally even on Sunday after Brexit, is talking to board members and CFOs and treasurers about where they are and how they need to be thinking about it and what questions they could be anticipating. And that's what I'm looking forward to sharing here over the time period. But one of the things that I noticed was that CEOs and boards very quickly, really the day after, on Friday after Brexit already, and following that, started asking the CFO questions about foreign exchange that are starting to be pretty in-depth, and quite a few customers were very quick to be able to answer it, and others said, well, why don't we make that a board agenda item for sure, and everyone said that. And we really want to deeper as a board into this. What then became interesting is the CFO obviously has lots of other things on their plate, but now they're starting to think about, okay, I've got a board agenda, I need to prepare the board ahead of the board meeting, as we from board members always do. So the CFO is going to, a week to 2 days before the board meeting, going to talk to some of the board members and say, here's what I'm trying to share. Are there any additional questions? Now, what was interesting to me was that quite a few of those companies that I talked to, the CFO hadn't had a chance, because a lot of things are going on, to actually communicate with the treasurer all the things that he or she wants to be able to bring to the board also recognizing that some of the questions may involve controlling or FP&A. So Treasury, obviously, as we all know, responsible for the risk management, et cetera. So how covered were we and some of that visibility to it? But the CFO very quickly recognized, okay, I need to really get even closer into this area that I've been kind of thinking about as a cost center, which is Treasury. I'm thinking about it more of the services area, but I'm not having that conversation yet. And quite frankly, I've been able to facilitate quite often that. Often the treasurer and CFO are talking about this, but they're asking, what do you think the board is going to ask, and prepare that. And I think that's what I want to share next. But there was a timing delay as people were thinking about the CFO, what the CFO was saying to the board. Board members were happy, so they didn't see the urgency to immediately talk to Treasury. And I hope this doesn't become a fire drill for a lot of Treasury departments.
So Wolfgang, is you're out talking with CFOs. I know I've had a lot of conversations with treasurers and CFOs over the last couple of weeks here, and one of the questions that I'm still seeing sort of a delayed response with companies that are trying to figure out how to solve this problem is how were we affected by the Brexit? We were in a conversation with a company last week that is at the early stages of trying to put in a foundation. And we were sitting in their offices on Thursday, and they still hadn't gotten a full accounting of what the FX impact is due to the Brexit issue that happened a week prior. Maybe you could just kind of give some sensitivity to the audience here on the type of questions that we're seeing come down, and that you would envision companies needing, or CFOs and treasurers needing to be prepared for.
Yeah, so the immediate question that came really the day after the Brexit vote, were already on Friday, and certainly by Monday, quite a few CFOs were asking the question, okay, tell me what my sterling exposure is in our sterling subsidiary, as well as non-functionals in all the other areas. That's the very basics of it. And a lot of people, that was kind of the first question, the first thing. The second one was, okay, euro seems to be impacting on this. What does that mean? So then they started thinking more about, okay, euro and sterling. And now they're starting to think more, and I think we'll talk a little bit more about this, is what does it actually mean overall? But the other thing that they were then thinking through is, okay, that's my currency impact. I need to understand what my exposures are. And based on that, I need to start thinking about and pulling other people in. I was talking to a CEO of a 26 billion revenue company, and he very quickly got to, okay, once I understand where we're all exposed, I really need to talk to the head of logistics and figure out what do we need to do from a logistical point of view over the next 3 to 6 months, but certainly 3 months, and move on. So they're starting to think, as a CEO and CFO, as well as the board will, what other impacts do they have? But it's all going to be based on how exposed are we in the first place. So if you're a Ford and you have 16% of your revenues in the UK, is that known? Isn't that known? And what is the net impact of that? So they really want to ask that question, then say, well, how important is this from an exposure point of view and from our business point of view? And then they start worrying about, okay, what does it mean from interest point of view, from borrowing point of view? What are the tax regulations? And a lot of these things that then fell out of it, but all was based on, okay, how am I exposed? Are we actually in the UK?
So as you think about those questions, and we start thinking about giving advice and counsel and support for upcoming earnings call, I know some of these are right on people, but the same questions are going to be out there a quarter from now. Let's go through some of the areas that we think it's critical to be prepared for. So, Wolfgang, you've been a staunch advocate of understanding exposure and currencies from a portfolio perspective, but I think it's really important to understand why you think that. And I think that the last week or 2 weeks are a perfect example, given it wasn't just the sterling that was moving on us.
Yeah, and I think that you want to move away at the board meeting from just talking about the British pound and, all the forecasts. Is it going to 122? Is it going to go back up to 140, and what level there is? And you got to kind of move away from it and say two things. One, there have been 12 crises in the last 18 months when we think about the Russian ruble, the Swiss franc, and all these other ones that we think about over the last 18 months, and they're all coming from different areas. So while now everybody's thinking about sterling, the natural was UK, and I actually came out that day, as you know, on Fox and on CNN and said, the next one is probably going to be China. So as everybody's starting at the board think about, what's sterling going to be, really understanding the portfolio of where one is all exposed to and then how one's mitigating, and that relaying that information to the board and to the CEO and CFOs so that the CFOs are really well prepared. We'll go into more detail what that preparation looks like is really important here. And we saw all of a sudden, and it did happen, that all of a sudden China started really moving and weakening their currency significantly to the weakest level we've seen, et cetera. So, and much bigger moves than we've seen even in 2010. So really understanding it, because we don't know where the next exposure is. Nobody does. The next thing that one has to do, and this is really key, is have a platform that actually can do scenario analysis, not just on your derivative products, but really ensuring what your exposures are and what does what mean, so you can do what ifs. A lot of companies that we've seen that are not customers of ours, they may have Excel spreadsheets and they'll have some processes in place to mitigate that, and that's the right thing for the Treasury to do to some degree. But then when they all of a sudden say, well, what if we hit 120? What does that mean? They're not set up for that. And what does it mean if all of a sudden the Chinese currency goes to 7-1 against the dollar? And what does it mean to all of a sudden change the functional currency? And there's a lot of value. There's a great paper done by KPMG not too long ago where they have, after lots of research, come out and said, you can take pretty much 1% of your top line, and if you manage this correctly, you can take that 1% of your top line and add it right to your net income line. So if you're a $10 billion company, it's not unusual for you to actually have a $100 million impact to the bottom line. And that's the conclusion of that paper, and that's how important it is. So having the scenario analysis to do it will be increasingly valuable to the organization. Yeah, and then the corporate currency policy. I think this is really important, and I've had this discussion with numerous companies. I can't even tell you how many of them. So a lot of companies have this policy of let's review it with the board every couple of years, and management reviews it maybe once every 6 months or so. In this sort of environment, we're really recommending that the board is very aware of the policy and really has this agenda item every year, once a year, and that I'm talking about the policy, because the policies and the business does change, as well as we now have seen the environment does change. So having corporate currency policies and having that revisited by the management on a quarterly basis and by the company on an annual basis, and I've seen a lot of companies make that change immediately as one of the recommendations on their board packet. Yeah, at the end of the day, it isn't just about, balance sheet. It isn't just about cash. It's really about helping the company understand what are the impacts on every single line. We all know that when public companies specifically go out, the first thing they come out with typically is an earnings per share, so understanding what the impact on earnings per share is. We all know that can be impacted by both the balance sheet and above the line. The second number that they come out with then is really what their revenues were, their growth. Right now we're seeing an incredible amount of companies who are saying, I want to do a constant currency analysis, especially on the revenue side, versus a currency impacted. And it's worrisome, the things that are being done out there to try to back into that number. It is complex, but it is a data problem, and it's very solvable, very quickly solvable. But I've seen some companies where the CEO is reporting on a constant currency number that, one needs to be really sure, especially investor relations, that then really goes in there. And at the end of the day, and this comes back to the earlier point, is this is an enterprise-wide risk. This isn't just about the CFO. This is about all parts of the area. So what's the team that we're going to apply for this and really address it? But the beauty of it is Treasury, and I see this, proactive Treasury is doing this a lot right now. They're starting to see their value within the company significantly rise, because the people who really know it and understand it are actually adding value to supply chain, cost of goods sold, to much other areas, sales, much other areas, to add value by really telling them how they're doing it, how they're managing it, and the benefits that can be achieved from doing so.
So Wolfgang, let's take this down another level here. And coming out of our last session where we introduced our Brexit rapid response analytics, we got a lot of interest, and I know you've had a lot of interest in your one-on-one conversations with CFOs around really getting into a much more detailed assessment and flash report around how currencies are impacting the business, so they can be prepared for those conversations. So, what we've got sort of outlined here is a report that we've been putting together for some of our clients that can go in and help them really quantify the impacts of currencies on EPS. Help them get their head around how much exposure we've got, what currencies do we have exposures in, where do we have the most risk, and ultimately how does that translate through the key elements of the income statement here. And as we go through this, we're going to really decompose this and talk about a few of these key indicators here. So the first one, Wolfgang, is just sort of the summary of sort of what's the impact and the protection. You want to comment on some of these key items here?
Yeah, and I'd like to preface this by saying, really, anybody who's listening to the webinar today, and I know there's lots of great people on there, is this flash report, if you want to help your CFO, or if you're the CFO, I saw quite a few CFOs in here, you want to get this to your board, this will cover on over 90% of analyst questions. So what we do and have done for 5 years now, every single quarter, we review thousands of companies and their earnings calls, and we actually track exactly what the questions were and what the answers would be. This report filled out will answer over 90% of those questions and will show confidence. So even if there is a question that you may not be directly able to answer out of this, then having this information, you can then, quite frankly, block and bridge it into this is the information that I think is really important. So going into that, if you're looking at what are potential EPS impacts, guidance there is really obviously important, then really open people's eyes to, look, we've got 120 currency pairs, and and this isn't just about the sterling. The sterling is only X% of that, but the number of currencies that we're exposed to, not currency pairs, is about 52. And then let me tell you how we're managing it. The balance sheet, we have a hedge ratio on more than 90%. Income statement, we don't hedge it, but we watch it really closely, but our risk is X, so our total risk to the balance sheet and the income statement is Y. Having that already at that, and that's part of it, is already really key, and having that very succinct and being very confident in it. Then, when then the question comes up, what are the largest exposures? Really being able to say, okay, here are my biggest ones, but let me tell you how my riskiest ones are. And you see in this one that, yeah, the largest one's the sterling, but really my riskiest ones, it's in this case, and this was obviously a currency pair, went into the fourth row from a value at risk evaluation point of view. So it does matter what the sizes is, and I think one needs to continue to educate, especially publicly company, and all their investors need to be educated, not just what the exposures is, because they sound always so much larger, but really what the risk is that one is exposed to here.
Wolfgang, one of the things that we've been invited to comment on several cases is how companies disclose risk in the financial statements. And you made a very good point a number of years back that it's sort of an asymmetric risk disclosure, because it doesn't talk about the underlying. It really talks about the risk on the derivatives. And I think maybe you can just comment on if you're really trying to help organizations understand, or investors and board members and bankers understand your overall picture, you need to look at this from an exposure and pre and post hedging exposure and risk scenario.
Yeah, so it's obviously very important to say, okay, here's my risk, and here's what I'm doing about that risk, and here's what my net risk is. And we all know that the MDA requirements here are very loose today, though having been in the UK as well as obviously in the US as well, they're reviewing those. So I would encourage people to be much more proactive on this. Right now it is, well, if the euro moves 10%, then we could have this much at risk, and that's the best MDA. But quite frankly, investors aren't particularly impressed with that answer. And they know they read it. So if you're now going into looking at it from really through the financial statements, look at your gross exposures, the risk associated with the net risk after, and know that from a revenue, COGS, OPEX, NOI, and at the end, net income and earnings per share, that's what everybody's looking for, and that's what they're going to be reported on. And having that at your fingertips, quite frankly, if one would do it today, you'd still have it probably for your board meeting, as all these board meetings like ours are at the end of July and going into August.
So, as we kind of tie out the CFO Flash Report here, I think the other key element of the conversation that's been coming out of this, well, given where I am today, what's the argument to do anything different?
Well, I think that, yeah, I totally agree. So I think what is important here, and this is something that every CFO has been really thankful that I said, that is, when you're presenting to the board, here's where we are today, then the question that's going to come is, what's it going to cost to actually mitigate that risk further down? That question, and every CFO said, yeah, that's right, that would come, but they haven't thought about it in preparation for the board, and I really strongly encourage everybody to really go through this exercise, and we're happy to help on this, obviously. If you have the portfolio and everything ready to go, you can probably get some good ideas from maybe your bank, et cetera. But I think here it's really important to, A, look at your y-axis. So you're looking here is, what is my risk of the entire portfolio impacting? And you're going to need to put it into two categories. You're going to have to put it into your balance sheet as a snapshot, and you have to guesstimate that on your P&L as well. But in this case, let's just use this as a balance sheet example, is the risk of the portfolio of currencies impacting this company was roughly $37 million, 36, 30. That's the risk. That's not the exposure. That's the risk. So now they're going to say, okay, I've got this risk. What does it mean? And the next thing to actually, if I manage that risk, and what you have on the x-axis below is to the left is interest income. So as you're managing it, where am I actually getting interest income where it's not actually costing me anything, but to hedge it actually creates interest income? And then at what point does it turn and actually become a cost? So I was over the company, and they actually have a very large India expense exposure on their expense side, so above the line. And everybody always thinks it's really expensive to hedge their P&L. Well, reality is right there, they actually have a very large interest income already. So all of a sudden, looking at this and putting this in perspective, because not all these board members, matter of fact, most board members don't understand foreign exchange, but here's a risk-reward, efficient frontier picture that immediately says, okay, I've got $37.5 million at risk, and here's how much it's going to cost me, and look at it from interest rate point of view, and we're happy to follow up with questions on this because I want to be sensitive of times. Well, all of a sudden, this company has basically no cost of managing this risk down to roughly $4 million, because they're first obviously going left to about roughly 16 million, maybe 17, 18 million of risk where it's all income, and then there starts to be cost, and then there's a tail where it starts costing, if I want to go 100% hedge, it's going to cost $400,000, in this case a quarter. It's really important to be able to have this conversation with the board. Otherwise, if you don't have this conversation with the board, you're going to end up having a conversation with the board of where you think the sterling is going versus the dollar, the euro is going versus the dollar, and going to ignore probably 95% of your other currency pairs.
So, with that, you can then obviously think about it, in terms of the protection level. So, Wolfgang, you want to comment on that, and then we can move to the last section here?
Sure. Then what we're able to do with the technology too, and what you need to present to them is, well, where actually are we today? So this dot is, and this is a true example of a company, obviously goes unmentioned, but they're about $4 billion revenues, is that they actually managed their hedges, because they weren't managing or hedging everything that was gaining interest income. They were doing it more on size of exposure. Where they actually were is they were actually at roughly 27, 28 million risk by not really paying much on interest and or receiving much. So they have actually a way to do it. And what companies then want to do is, okay, where this becomes a really powerful tool for a CFO to have a conversation with the board, because the question that this thing then begs for, and that actually helps you guide as an organization, Treasury, and if Treasury's on here, I would really focus the CFO on this, because this is job protection, quite frankly. Ask them, where do you want to be? Where do you want to be on this curve? We need guidance from you. What risk is the company willing to take at what expense? And if you have that, and I've had these conversations over the years where, I remember the Russian ruble whole problem came up, and people showed this, our customers showed this and said, where do you want to be? And they put it at 0. And that tail end, the expensive part was Russian rubles. So they said, hey, we all agreed that we would manage towards 0 cost at about 4 million risk. And the risk was there, and it cost $400,000 to do it, and we decided not to do it. That saved people jobs, to be quite frankly. But even more importantly is get the CFO to discuss this and the CEO to discuss this with the board to have a real good action plan of where the company should be.
So, as we start tying things up here, we announced last week a solution to help companies go in and very quickly assess their situation. And what the solution is what we call our rapid response analytics. And it's something that we can do in a very short period of time, given the agility that our cloud-based applications provide and the strength of our expertise. If you have situations where you need, and I had a conversation with a controller this morning where he's got 2 plants in the UK, which he really has no visibility to, we can go in and do a very dialed in assessment of that exposure and risk and quantify many of the facts that Wolfgang is walked through in the scenario here. So if you're interested in learning a bit more about this, feel free to reach out to us and connect with us either through our email that's available here. And again, it's something that can be done in a very short period of time with very minimal impact on your IT organization, because we all know that IT always has 120 other priorities that they need to focus on. So this can be something where we begin to build that CFO Flash Report or very focused analysis of your sterling and Brexit related exposures and help you be prepared literally by your next board meeting coming up here. And this, Wolfgang, maybe you could just kind of finish off on this and just talk about the fact that as you were out talking to CFOs of companies that were engaged in sales discussions with, you realize that there's we need to also deploy our consulting resources in situations where people need a fast answer, and you really committed to support companies that needed that, and we can tie things out.
So we're ready to, and really have committed also client services to really be ready to support anybody who wants to get after this as quick as possible. So, we're anticipating and already seeing a wave of people who are ready to get ready for this board meeting, and we can still support it if that's kind of the end of July, beginning of August, certainly, and then others, maybe to give them the general idea, so have that discussion so that then they will be ready to go through that execution for the following board meeting. So you got this urgency for this board meeting. Hopefully we showed you some of the talking points that at least you can talk and share with your board about, here's what we're thinking about doing. Do you want us to investigate this further? And if that, then we're going to engage somebody to really help us understand this quickly and not make this a big IT project or any other project, but really we have the people on stand. We have the people ready to engage on this thing and support it, and we'll go at the customer speed, quite frankly.
Great. Well, Wolfgang, I know we want to be respectful of everybody's time. We're now at the top of the hour here. There were a few questions that trickled in as we were going through the session today. And for those of you who did submit questions, we'll reach back out independently and make sure you get an appropriate response to the questions that you asked. Thank you all for joining us on today's session. Hopefully you found this informative, and obviously feel free to reach out to us via the information provided here, and we'll also send out a follow-up email with a link to the article in Treasury and Risk that Wolfgang penned about being prepared for what's coming next. We'll have another session probably sometime in the next 2 to 3 weeks as further developments occur related to Brexit, and the fallout continues to be felt, and we get a better view on how companies are dealing with this. So look forward to engaging you all in a further discussion. Thanks again, and Wolfgang, thank you for your time. I know you're busy, and good luck with your next meeting today.
All right. Thanks, Andy. Bye-bye, everybody.